Life is a game of probability. It's a game of skill and luck. You don't know for sure what will happen to any company or any market.
A lot of people right now look at trading as a way to make quick money. How do you look at it?
That's a trap. 93% of entities in the market lose money.
What is something that you focused on that led you to believing that there is going to be a trend shift, and very strongly, and it turned out to be true?
I always say that anyone who tells you they have this crystal ball or this magic wand that they know which will be the multi-baggers is fooling you, because no investor in the world, no fund manager in the world, no one has had a portfolio which has had even 40-50% multi-baggers, let alone 90-100%.
Most people spend their whole lives and they can never figure out money. How do you think you achieved that?
Looking back, you realize so much of who you are is your childhood. You have a happy, secure childhood and an abundance of love and an abundance of money, not in the sense of too much money, but the mindset of abundance. My parents were not rich, but in their heads they were rich.
What advice would you like to give to 20-30-year-olds who are starting their careers about finance?
I often say the good investing is boring. Many times people tell me that you repeat yourself in your interviews. I said the investing advice doesn't change every 2 weeks. It is what it is.
Hey everyone, this is Shruti. Welcome to my podcast, I'm Just Curious, where I talk of all things I'm curious about with the people I'm curious about and how they turn their passion into their profession. My guest today is Devina Mehra, founder, chairperson and managing director of First Global, one of the world's most respected data-driven investment firms. Devina is a gold medalist from IIM Ahmedabad and Lucknow University. Under her leadership, First Global became the first Asian firm outside Japan to gain memberships on both the London Stock Exchange and the Nasdaq. Her insights have been featured across top global platforms from the Wall Street Journal, Financial Times and Forbes, CNBC, Bloomberg and ET Now. Today we'll talk about how First Global thinks, how they pick companies, how they manage risk and what truly drives long-term wealth creation. Hi Devina, how are you doing today?
I'm fine, thank you, Shruti.
Welcome to I'm Just Curious. It's a pleasure to have you.
It's an interesting name.
Thank you so much. It's an interesting person that I'm going to have a conversation with. I've been very excited to have you, and there have been a lot of questions in my mind, and we were having a very lovely chat off camera also. But let's start from the beginning.
Right.
You have all these titles and this big firm and everything attached to you, right? But I'm very curious about how would you want the people, the audience, to know who Devina really is apart from all the titles? Like when you think about it, like what comes to your mind that who Devina actually is?
The thing I'm most passionate about is learning. So you can say I am a lifelong learner. So I'm a student, and also because my parents were both academics, so the teaching genes are also strong.
Yeah.
So I am also a teacher. I have increasingly, so this book that I have written is essentially a teaching thing, that whatever you get to understand, then you teach. Then you want others to see. Have you seen it this way? Have you looked at it this way? So,
right.
So that is a good part of who I am, and the other part is that what you see is what you get. I mean, very often after my interviews also people come and tell me, oh ma'am, you were so honest, and I say that it doesn't occur to me to say anything other than what I really mean.
Yeah.
One of the compliments I treasure is one of my school friends telling me that I have now known you for more than 50 years and you've always been kind, that I have never heard you say anything nasty about, even in school days, about somebody behind their backs. And it was, I treasured that because that was not something that I had thought about. I had never thought that, but
it's an observation that somebody had, and it's like you sometimes are oblivious to who you are as a person, but people can see. Right. Let's start from the beginning.
Sure.
How did you, like I mentioned, you were academically very, very like a gold medalist and very academically very sound, basically, right? What got you into like, okay, I have to get good marks, I have to was there a goal and ambition about it, or was it like something that you enjoyed and it just happened? And how did finance, how did you get into finance?
So I mean, I think it's just something that you enjoy and that happens, and I always say my benchmarks were never external. So even during my academic career, my benchmark always was that am I doing my best? So that always, and And if you think about it, that's actually a very high benchmark to have.
Yeah.
So I didn't want to feel that I didn't try hard enough. So, I mean, I was just sitting with my school friends a few days ago, and I said, like, during the school year, I was not that much into studies. I would attend all classes. So all through my life, I've never missed classes. But I would not go home and study till the exams were kind of round the corner.
Right.
Because I've been so fond of reading that I always had all the other reading to do. Yes, as I said, that I didn't want to feel that I hadn't tried hard enough. So whether it was university or IIM, there were a whole lot of people who used to keep track of other people's grade. But that was never me.
Yeah.
And sometimes when you're not looking over your shoulder, like in Lucknow University, my marks were an all-time record in the history of the university. But like I got 88% and the second highest was 78%. So I mean, if I'd been looking over my shoulder, probably the gap would not have been so much.
Right.
But I mean, it is also a birth lottery. I always say that, youth say that this is all merit, but I mean, I was growing up in the home of 2 professors with lots of books around. So I always from childhood thought that I was, that term birth lottery did not exist then, but I always thought that I would been exceptionally lucky in the circumstances in which I was born and the gifts that I was given.
Right. I mean, yeah, now that when I also didn't know about this term birth lottery, but I think I heard Warren Buffett talk about it once. He attributed his success to luck, which was, when I heard about it, it was very interesting to me. I was like, somebody of that level, who people look up to so much, how can he say that it's luck? But then when he explained that I could have been a girl, I could have been like, all that stuff.
Not white, not American.
Yeah, exactly. Not born in the US, maybe born in some other country which is inflicted with war and all these things. So then things would have been different. I wouldn't have been born.
So which is why, I mean, when people talk of, reservations are bad, it should be all merit based. I mean, are you comparing apples to apples? I mean, as I said, that the circumstances in which I was born, and let's say, there's a pavement dweller's child or a landless laborer's child, and even in relatively prosperous villages, this was an eye opener for me. Somebody told me that, do you know that those children never see anything written outside school, because there are no signboards and there is no newspaper or book in their house, and you realize that the level of deprivation which you have not thought about it ever.
When you look back, can you think of that one particular moment or incident where that shaped your mindset about money and that led you into the world of finance, or is it just something that you stumbled upon? And also growing up, like having this mindset is not easy, right? The one that you have about money. Most people spend their whole lives and they can never figure out money. How do you think you achieved that?
Actually, the funny part is, growing up, I thought I didn't think about money at all. Money was the last thing I thought about, because my parents had zero interest in money. I think they didn't even know their own salaries.
Okay.
But I think what happens is that when you grow up, so much of, looking back, you realize so much of who you are is your childhood.
Yeah.
So if you have a happy, secure childhood and an abundance of love, and an abundance of money, not in the sense of too much money, but the mindset of abundance. My parents were not rich, but in their heads they were rich. So I never heard any conversation at home about money, that budget, beginning of the month, end of the month, nothing like that.
There was no cost cutting, there was no like, we can't buy this, we can't.
So that was the thing. So that's the strange part, that and when I landed up at IIM Ahmedabad, I didn't know what a share was, what a debenture was, what debit was, credit was. Everything was new for me. So, and then after that also, it was more a process of elimination, that I applied to banks. I got what was then the most coveted job in Citibank, and I joined there. But after 2-3 years, I realized that was not what I wanted to do all my life. For one, Citi was a very political, very internally competitive place. So culturally, it was not a good fit for somebody like me. And the other thing was that I was very keen on learning more. So I was exploring various things. I even went and met, you'd be surprised, I went and met the museum director in Bombay. That was the interesting thing one can do in life. I went and met
Wow.
the Economic Times editor. So it was more an exploration of learning. And then there were two triggers for getting into the markets. One was Dr. Manmohan Singh's liberalization budget, where he opened the market to foreign institutional investors. And I said, now the market will professionalize, because till this happened, there was no concept of equity research or securities research in India. We did not even have a course in IIM because that career did not exist.
All right. Okay.
So
this was what year?
This was 92.
92.
92 was this, as well as then at that time SEBI did not exist, National Stock Exchange, NSE did not exist. So there were these regional stock exchanges all over the country, I think 19, 20 of them, and the biggest was the Bombay Stock Exchange, BSE.
Okay.
And BSE then advertised that we're going to give 71 new memberships to professionals. And for 55 lakhs each, which of course was a huge amount then, but it was a quarter of the market price. The market price of a BSE card those days was 2 crores.
Oh.
So people said, don't even apply. That, you know, this is a brokers club. There was no regulator, as I said, and so they will give it to their, you know, bhai bhatija basically. And plus you are not a Gujarati, you are not a Marwadi, which is almost 100% of the brokers, and you are a woman, so who's going to give it to you?
Yeah.
So I always say this whole, you know, visualization of goal, manifestation, the biggest example of that is that BSE card that I got. And as they say, don't visualize the route, how it will happen.
How it will come to you.
So of course they tried their hardest not to give it to me, no doubt about that. But in the end, and I didn't even know it was there in their marking system. In the end, I got 2 extra marks for my IIM gold medal.
Oh.
And that pushed me
just
over
because
the
you like were able to get it because of that.
Because of that, yes, that pushed me over the cutoff.
Wow.
So you don't know where the dots connect in hindsight.
Yeah.
So that managed to push me over the cutoff. So I got the BSE card, and then
it was a lottery system of sorts?
No.
Then how?
There were marks. So there were marks for your education, for your experience.
Okay.
There was an interview. And the interview is where they rigged it as much as they could, and so on. So, but you know, then finally, like that, they were like,
wow,
so many marks.
Then that even speaks volumes that it was not a lottery system and you got it on your own, like, you know.
Yeah,
merit.
I mean, that was, and as I said, I don't know how, you don't know how the dots connect. Like when I was in Citibank, I was in investment banking, what was then called merchant banking. And after a couple of years, I thought, you know, I'd learned what there was to learn, and I was looking for a switch. But somehow, for some reason or the other, it kept getting stretched. I ended up spending 5 years there. But when I applied for the Bombay Stock Exchange card, they needed capital market experience, and the only department in a bank that counted as capital market experience was
Citibank.
Was merchant banking. I managed to, since I had 5 years experience, so that counted. So again, as I said, you don't know what the plan is of the universe.
Yeah, truly. I mean, it was meant to be like you were like guided towards it in a way.
So in the 90s, it was basically we became institutional brokers. So I mean, at that time, even a company membership was not allowed. A broker had to be a proprietorship or a partnership. So the card was in my personal name as you know, Mrs. Devina Mehra. So after a few years, then SEBI came in, NSE came in, got the NSE membership also. Corporate membership was allowed, so it became First Global. I mean, we were still using the First Global name for the research, but the
card has your name.
Memberships were not in that name. So that also changed over time, and we became very large institutional brokers, almost entirely dealing with foreign institutions. So through the 90s, that was, and built entirely on intellectual capital, on our research. So much so that when these foreign institutions came in, the foreign brokers also came in. And in the beginning, you know, as I said, I had not studied that either. And I said, like, these people have been doing it 50 years, 70 years, there must be lots to learn from them. But I looked at the first few reports and I said, this is junk. This is not good analysis, it's not written well. So I never looked at competition again. I never hired from competition, not for research. I mean, sales is different, but for research, I never hired from competition. I had only freshers. And mine was the only firm that was hiring freshers. So we became kind of the training ground. I said, it's difficult to train freshers, but if I don't like what competition is doing,
You don't want somebody to come with that whole,
so then there's an unlearning to be done.
Exactly.
So
exactly.
that is not what I wanted.
You want fresh, clean slate to start with, so that you can put your strategies and systems in place, right?
So I mean, many things is difficult to teach freshers.
Yeah.
I mean, right from first of all, the entire education system is that there is this question which has only one answer. So whereas markets are about imperfect information, they are about ambiguity, they are about several probable outcomes. So that's a very difficult mindset, especially since most MBAs start off as engineers, and my degree is also in maths and stats. But so that was one switch. The other switch used to be that I am like because unlike as a banker, you are dealing with the GM finance, but when you are doing research, you are dealing with the CEO and CFO. They'll say, oh, so and so has been doing this for 40 years. How can I, question their decisions, whether what they are doing is right or not? And I am only 25, so that was the other thing you have to train people. So I mean, now on Teachers Day and Guru Purnima, I get a lot of messages.
Rightly so.
So in some ways, I have carried forward my parents' legacy. My father was very keen that that one of us at least goes into academics.
Teaching profession.
Teaching, because he loved it so much.
Yeah.
He was that was the love of his life.
Yeah.
He was like a very good teacher.
Yeah.
I mean, I just met somebody whom he had taught as his first batch, not met actually his son, and he said, when I told my father your name, he said it must be the daughter of Dr. Devina Mehra, and he taught him in the first batch in the 1950s. Said he remembered everything about your father because as a good teacher you remember.
They leave an impact on you. They shape your mind, and
I'm really looking forward to. I'm going to Kolkata later in the month to meet one of the nuns who used to teach us back in school.
Wow. That would make her feel so proud.
And she still remembered. I mean, somebody shared a couple of pictures from my birthday party, and she remembered all of us. That that girl who used to have two long plaits and all that. So
that's lovely. That's lovely. Right. But like you said, that First Global just happened. Like it was one after the other. Things just kept happening and everything, right? But what was that final moment, or like how did you finally decide to structure it? Also, like you talked about mindset, right? And you also offer like trading as a platform on your platform. A lot of people right now look at trading as a way to make quick money, right? How do you look at it? What are some of the things that you think where people are making mistakes, where some of the things that they can improve in, and how can they use this opportunity?
That's a trap. So please do not get into
like
trading.
That.
If you're even if you're not doing it full time, definitely not. Even if you're doing it full time, that is not the place. You see that statistics of SEBI every day that 93% of entities in the market lose money. And even if you look at I have done this parsing, almost all the individuals are in the 93%, the 7% is all the large players. And also if you further go down, the lower the income, the more your losses, the lower the education, the more your losses, the people from smaller cities, more the losses. So please do not get into trading. That's my one line takeaway, instead of saying how to do it better. And many times people say that, oh, but so many people made their first capital in trading. See, for example, when I came into the markets, and many of the people whom you have heard of came into the markets were far less efficient. There were even very simple arbitrage opportunities available. As I said, there were 20 stock exchanges. The price of the same stock could be different in different places. Information was not available so seamlessly. You didn't even know the price of a transaction till the end of the day, and the bhav copy was published. So people even made, that you are buying in BSC, selling in Calcutta Stock Exchange. So those kind of things also you could make money. In fact, I remember somebody asking Rakesh Jhunjhunwala that you made your first fortune in trading, so why do you tell people not to trade? He said, I smoke, but I tell my children not to smoke.
Not to smoke,
because it's a high risk strategy. So I mean, in a high risk strategy, somebody might make money. So whenever people talk that this is the way to do things, and that so and so made money in this, and what is the route they took. So I said, that's fundamentally the wrong question to ask. The question you have to ask is that of all the people who use this strategy, what happened to them?
Yeah.
So for example, if you have a strategy where let us say every year 90% of the people go bust, but the 10% double their money, or make 10 times their money, let us say. You play this 5 times, at the end of it 99% of the people are gone, but that one person has made 10,000 into $1 million or whatever. So that is, so don't get trapped. That's a wrong question to ask always. How did somebody become rich, and let me replicate that strategy. So I mean, there are many points to that. In fact, that's one of the longer chapters in my book on why you should not follow famous investors, traders, whatever. So that's the thing. But I mean, in terms of our own journey as a firm, so the 90s were this doing the broking and also some amount of investment banking, what is called the qualified institutional placements now. And then towards the end of the 90s, I did something which nobody had ever thought of, which you mentioned in your introduction, which was going global. So that was totally first principles thinking, because there were 2 triggers. One was the Asian crisis, which for most of your viewers would be in the history books. But late 90s, there was something called the Asian crisis, in which all these high growth Southeast Asian economies went through a crisis where within a year the currency fell, their markets fell. So in dollar terms, all these markets fell between 50 and 90%. And in Citibank time, I had spent 6 months in Indonesia. Indonesia was down 90%. I said, today if I had been an Indonesian, my net worth would have eroded by 90%. So it's dangerous to be in one market. So that was one. The other was simply that I said, how long am I going to do these same old companies, the Bajaj Auto and Infosys and HPCL, BPCL? Let me go and learn about something else. So by that time, these very large funds in the world very well. So, and including some very senior people there. So I went to them and I said, I want to globalize. And they said, add a Thailand or a Philippines, and the emerging market fund manager or the Asia fund manager will give you some business there. I said, what's the fun in that? What's the fun in adding another small market? So I said, I want to go to the big markets. I said, who's going to listen to you in the big markets? You are a nobody. I mean, they have all these Merrill Lynch's and Morgan Stanley, Goldman Sachs, Citicorp, HSBC and
JP Morgan.
So I mean, who's going to listen to you? And at that time, nobody had ever thought that research could be done remotely, and I'm talking the 90s. But I broke it down. I said, data is available on the net. Analyst meets are on the phone, so you can join from wherever. And they said, if you want to go to those markets, do the small stocks. I said, I want to go to the big markets and do the big stocks. Because if I think I know.
Small stocks, by that they mean penny stocks.
No, not just that. Stocks with not that much research coverage.
Right.
Who have 0 or 1 research analyst, that kind of.
Got it.
Not necessarily penny level, but still not the big, well-known.
Not too much data available about them.
No, data is available. Research is probably not available. But I said, I want to do the big stocks. So if I think I know how to do securities analysis, why should I not be able to do it? So against all advice, in 99 we became members of the London Stock Exchange. Other than the Japanese, nobody had gone west. And then about a year and a half later, the NSD thing also came through. And the most heartening thing, Shruti, in all this was that here you also know the journalists and editors. Basically, you know the media to an extent. There you didn't know anybody. So it was only anonymously only your reports going to them. And in no time we were in Forbes, Fortune, Business Week, Wall Street Journal, front page, Barron's, just on the quality of the work. Because it's a passion for us to just go deeper and deeper into things. So So I used to tell my analysts that unless you can tell me the derivation of a formula, don't use the formula, because then you don't understand what that formula really does. If you are using a model, do you understand the assumptions and limitations? Because then you are building a building, you don't know what's in the foundation. Or what's missing. So that was a very heartening phase. And the next phase is because see, till then you are still advising the fund managers that you should do this, and beyond a point it gets frustrating because you're telling them and they may or may not do it. So then the next step was asset management. So went into global asset management in 2015, and then the PMS portfolio management scheme in India started in 2020.
Oh, very,
So I mean, you'd be surprised, I had the license for 20 years before I started, because I wanted to be sure I can do a good job for the investor or client on the other side, and that I have some consistency and predictability. It's not just that I like this stock and I bought it. So I didn't mind being the first to go global. I didn't mind being very late in the PMS game. It was just that when I thought I could do a good job. So that was the criteria. So this I started only after we had a artificial intelligence machine learning system. So that was the so that there is some consistency and predictability. So I mean, not because AI was available, because I realized that the game had changed. See, in the 90s, the most fun part of this research thing was going around the countryside, meeting companies, going to plants. I have gone to all sorts of plants. I didn't mind taking an overnight train to go and see a cement plant in Andhra Pradesh, or going to some remote area to see a steel plant. And or sometimes in the 90s, as I said, because securities research did not exist, the companies did not have any investor relations department. A lot of conservative groups would refuse to meet. So many companies would refuse to meet. So I even would just land up at the factory gate, you know, somebody will meet, something I'll get to know. But now the game has changed. Then the edge was an information edge. And this is true not just of India, it was true all over the world, that a big fund manager could sit in even with an IBM or Walmart and get differential information. But now over the last 20 years, by law everywhere, it has become illegal to give extra information to anyone. So all data has to be put on the site. In the 90s, if you
like personally you can't give information to
personally
someone.
Personally or otherwise, I mean, everything has to be whatever you're giving has to be out in the public. So in the 90s, it used to be that even if there was an analyst meet, especially if you'd written a sell report on a company, they would not invite you. Now by law, the analyst meet transcript has to be on the website. So now the information is there. Now the skill set has moved to how well can you analyze the information. So there is now masses of data, and that's where the machine does it much better. Whereas the whole of the fund management industry by and large is still managing money the way it was doing in the 90s, and that's why, you know, the performance doesn't come. Because now the skill set required is not information differential, it is how to analyze
that information, the given and the bulk of information, right? Information has increased now. Earlier it was less information, now there are more companies, more information, more data to analyze. So it takes a lot of power and, you know, like analytical mindset to analyze all of it. But I want to go back once to the part that you talk about it now there's AI and artificial intelligence, and you know that, okay, how to analyze information. But you have picked big companies that have been success stories way before the artificial intelligence came in, right? Like Amazon, HDFC Bank, even Google, I believe, right? So how did you do that? Like how did in those times were you able to make a decision rationally rather than emotionally, as what most people do? And also, like, how do you not let the noise of everything around you, like the speculation around you, affect your decision making? Like back then, how did you manage to do that?
For one thing, I never looked at what anybody was doing, whether it was competition or people used to keep track of what XYZ institution is buying or not buying. I was never plugged into the market gossip. I thought that was irrelevant. So I always went by numbers, and numbers meant really going deep. So I mean, I learnt on the job. Sometimes I'd even ask clients that recommend good books on cash flows or valuation right in the beginning. And so one thing is that I always tell people, go beyond the income statement or profit and loss account. Look at the balance sheet, look at the ratios, look at the cash flows, because often things hide there. You know, if a business starts to slow down, and you come from a business family, you'd know this, that you would first tell the customer, take more credit. You know, take the maal to le jao, you know.
Yeah,
so
people, I've seen people who have done that.
So your receivable days will go up, your payable days at times when things are not selling, you'd stop paying your suppliers, so that will go up. And also go back as many years as the data is available, so you will see how that company and that management has gone through various cycles, not just ki growth over last year is so much, and actually do the detailed numbers. I mean, I used to, even like when you're doing projections, the more you drill down and try to project every line, the better your projections will be. It is not, for example, in a company profit and loss account also, not all expenses vary with sales. So for example, raw material, if you have the breakup, you can look at how much volume, what will be the price, and then if you look at, for example, employee costs, now that may not vary with sales at all. Even if sales go down, the employee cost you will have, it can go up. Some other costs are linked to your fixed assets rather than sales. So if you do that exercise, if you actually get your hands dirty, you will see what how does it pan out. Even if you're looking at a cyclical industry like cement or metals, if you do the numbers, often you will find that if, let us say, you're projecting that things look better for that industry, if you do the numbers, you will often find that the worst company in the industry will give you the biggest bang for the buck, because that hardly has any profits. So suppose,
so whenever it gets into profit,
no, it is like this. So if let us say one company has a net profit margin of 1%, so that means profits to sales is 1%, and another company has 10%. Now that industry does better, so now at the operating level, maybe 3-4% point extra is coming. So but then for that 10% wala, they are going from 10 to 14, but this guy is going from 1% to 5%. It's becoming 5 times. And then also it happens that you generate that cash, and then you can repay some loans, your equity price goes up, so that has a reflexive relationship, you can raise some money. So you actually have to get your hands dirty and see how the side, rather than upar say, you know, which is how a lot of people do. Even, I mean, I'll give you an example which is not from, which is not about company finances, which is macroeconomics. When we went to the West and we started covering the macroeconomic stuff also, and I at that time, I mean, I soon had someone, but when we just started, we had no economist on our rolls. So I had the usual engineer MBAs, and they said like, how are we going to do this? You know, you're asking us to project UK's GDP. I said the same way that you do for a company, if you drill it down and project every line, your projection is going to be more accurate than somebody who's doing it at a overall level. And the and we always used to be very bold with our covers, what is now called clickbait. That term didn't exist, but I used to tell my analysts that first you have to get read. Because I used to go to the fund managers' offices, and some of them would stand with a dustbin this high while talking to you, you know, because those days you had to send physical reports, you know, this is before the emailing of reports. In fact, one big cost on the P&L used to be the printing and the mailing of reports, because you're mailing them all over the world. And then while talking to you, they will just like keep picking up the like that, you know, 70% goes in unopened, then the 30% they will open, usme bhi half of it they will just look at the cover and throw it. But the first you have to get read. So the very first macroeconomic report we did for UK, the cover said that Bank of England's GDP estimates will not be met, and inside we had given that, you know, how we think there will be a shortfall. And when the actual numbers came out, we were right and they were wrong, and I was laughing. I said Bank of England, which is the central bank of UK, I mean, they would have literally hundreds of economists. And I had none.
That's such a poetic way.
And also, like, again, even some indices, if you go into how the indices are calculated, how they are what the questions in a survey are, how they are marked, so you will always have a better insight. And the other thing was that don't take anything as gospel. I read a lot, both business, non-business. So read everything, but don't take anything as a given that, even the biggest investor has said it, even the biggest professor has said it, it's being taught in universities, but still test it. Like when I started, one of the things was efficient market theory, that everything about a stock is captured in the price of the stock. I said, if that is true, then why does a stock can move 50% in one quarter when there is no extra news? So was this price efficient or is that price efficient? So how does efficient price market?
Yeah.
So those are, we did a fair amount of academic level work also, just trying to drill down and understanding things.
Yeah.
So that was a lot of what we did.
Yeah. You mentioned indices, right?
Right.
A lot of people use, like you said, that a lot of indicators have also been used over.
You're talking the technical indicators?
Yeah, about the technical indicators.
So
as well.
I left it at the fundamental. So 90s mostly we did fundamental, but towards the end of the 90s we realized that at times you're missing out on part of the move. So you think something is looking good, but it falls more before rising, or vice versa. You think something is looking overvalued, but that bubble keeps inflating before falling. So what are you missing out? So that's when we started on this technical side, and now it's 20 plus years, we've refined the system. Now my takeaway from all that is that however much you refine the system, the signals are too noisy if you go only by technical analysis. Where it does help you is exactly timing, that something looks good, you watch it, that maybe it will bottom out a little lower, or something is looking crazily priced, but you don't short it because it might still go up. But it is not by itself, it is not a good thing to use overall. I mean, they're like, we've done lots of refinements to those systems, but still I would say this.
Right. Makes sense. What advice would you like to, like you said that there's a lot of analysis that needs to be done now of the data that is available. What would you tell coming up young professionals or young people watching who want to get into becoming analysts and research analysts? What is one thing that you would tell them to focus on, and to how to develop that mindset of how to focus on the right things and not to focus on the wrong things? What would you tell them?
So first of all, have an independent opinion. Don't go into what everyone else is doing. And because the data shows that that every Diwali and January, when all these well-known firms give you that these are our stock picks, the data shows that they are actually on the average underperform the market. So do your own work. So that's the first thing. And as I said, focus on the numbers, because ultimately this is what I used to tell my analysts also, that all stories have to be borne out by numbers. If you are saying this company has great brand, where does it show up? Does it have higher market share? Does it have more pricing power, that when others have to cut prices, it doesn't have to cut prices? Does it have higher margins? Somewhere it has to show. If it's great management, again, where does it show? So that you have to focus your mind on that way. And in the last few years, other than the numbers, one thing which is true not just of markets but everywhere, in some senses understanding the numbers is easier, getting control of your mind is the more difficult part. So as I say, my pin-up, I mean I read a lot, but my pin-up author is Daniel Kahneman. His two books, Thinking Fast and Slow and Noise, so which is all the ways your own mind is set to trip you up. I mean, your brain has evolved for only two reasons: survival and procreation. It has no interest in optimization of your portfolio. So there are many ways your own brain will trip you up. So that is one thing you really need to understand.
Also, one thing is to have an opinion, analyze the data, and choose your pick. But it's also another thing to predict or to forecast, like trend shifts early on, like global trend shifts. How do you do that? Because like I mentioned earlier also, you picked stocks like Amazon, HDFC Bank. So you picked them at a time when you saw something, right? You saw that there is going to be a trend shift in these stocks. What is something that you focused on that led you to believing that there is going to be a trend shift, and very strongly, and it turned out to be true?
Okay, so first of all, I'll say to the first, let me come to the specific example. So HDFC Bank, yes, it was a trend shift in the sense till then almost the entire banking system in India was with public sector banks. So said like well-run new private sector bank comes in, it will get some market share, and also say as many of the others are pure numbers call. This was a plus call, because HDFC Bank from the CEO Aditya Puri downwards, there were a lot of city bankers. So these were people I knew personally. So banking is a risk business. So their risk head had been my last boss in Citi. So I knew he was a conservative guy.
Yeah.
So that
so
was
you wouldn't do anything. Just like for the sake of it.
So otherwise, I'm a very nervous investor in banks. So that's why I'm saying. And also they had the brand name of HDFC. So when they started, they were not a retail bank, they were a corporate bank, and I'd been a corporate banker. So I knew this thing from the inside, that it's very difficult to get into the consortium of the good companies. And their HDFC Bank, compared to even all the other banks which had got licenses then, had an advantage, which was the brand name and the contacts of HDFC, the parent. So those were the things. Amazon was a pure numbers call, and which was a very contrarian call, because the entire Wall Street had a sell on it when we put in a strong buy. I mean, Jeff Bezos sent us an email saying thanks for the support, because
you talking about that.
Yeah, so that was a numbers call, because that was the first time they had made a very substantial cash flow in the last quarter of 2000. And they had made some $220 million or $240 million dollar cash flow. And so I could not understand why suddenly and prior to that, a lot of analysts had been very positive on Amazon. So this was after the tech crash, and all the analysts on Wall Street who had been very positive on Amazon, they had suddenly turned negative and started saying it will go bankrupt. And for the first time in its history, it was not a bankruptcy risk, because the cash had started to flow in. So that was our call. But having said all of that, I would say now people ask me that I have a baby, and which multi-bagger can you recommend for the next 20 years? And I always say that anyone who tells you they have this crystal ball or this magic wand that they know which will be the multi-baggers is fooling you, because no investor in the world, no fund manager in the world, Warren Buffett, Rakesh Jhunjhunwala, whoever, no one has had a portfolio which has had even 40-50% multi-bagger, let alone 90-100%. So at the most, at a point in time, you can say this stock will double or triple, but beyond that, you never have. I mean, Jeff Bezos wouldn't have known that this would be the trajectory. Aditya Puri wouldn't have known. I mean, Amazon, if you read this is the other type of books people should read, is the actual history of companies. Right. Then you will come to know how many ups and downs there are. You know, this one line story ki suggested, everything went off well. Amazon tried dozens of things, failed at most of them.
Was it a story initially? Yeah, but after that also they tried many things.
Yeah.
And something clicked, something didn't. I mean, many times all these companies, Apple, Amazon, Tesla, all came close to bankruptcy multiple times. Yeah. So you live through that, you live to tell the tale. Apple also, people have this mindset, oh, Steve Jobs came back and he was this magician who did XYZ. Yeah. 7 years after Steve Jobs came back, 7 years, not 1 or 2, the Apple did nothing. Some years it would make a marginal profit, some years it would make a marginal loss. For 20 years after its IPO, it did nothing, that stock. So, in hindsight, it's all very, very simple. Nike, great marketing success. You read the story of the founder, it started in the 60s. And even after like a decade or two, he was an accountant. He thought like marketing, Phil Knight. So the marketing is all nonsense. Yes, this is too wishy-washy. Focus nahi karna hai, Yeah. So this is like, so read the actual stories. Rakesh Jhunjhunwala made most of his money in Titan. You read this year, one of my good books I've read is the Tanish story, which is written by the CEO of Titan. And you see number of times that business came, the jewelry business of Titan, the Tanish part came close to being shut down. There were so many crises along the way. So who knows which will succeed? Nobody has this crystal ball for 20 years. So, let nobody fool you by saying that. And because life is a game of probability, it's a game of skill and luck. You don't know for sure what will happen to any company or any market. Right? Index projections are the biggest nonsense in all of this. I have never given an index projection in either the new Samvat or in January. And only after I read Daniel Kahneman's Noise, I came to know the term for it, which is objective ignorance, which is things which you not only don't know, but which you cannot know, which is impossible that you know. And to talk with great confidence about those is the most ridiculous thing ever.
Coming back to our topic, we talked about how do you predict trend shifts, right? And you said that there is no crystal ball to predict anything. You can just do your research and analyze data and pick your bet, and then.
And I would also add to that don't try to predict most big trend shifts or new technologies. That's normally a trap. It's very attractive to say that I'll get onto this bandwagon of the new technology. In fact, just this morning I have written about AI in Mint. Yeah, so which is exactly that's normally a trap. And the reason is that you don't know which technology will succeed, how long will it take to succeed, even if it succeeds, which company or what particular type of technology succeeds. Even if that happens, will it make enough of a return on capital employed? And one of my favorite examples is that in the 20th century, the two technologies which changed the world were aviation and automobiles. And both have been a graveyard of companies as far as investors are concerned. And in terms of how long, I mean, people think electric vehicles is some new thing. I mean, Reva electric car was launched in India almost 25 years ago. So this is, and also there was this column written by one of the technology columnists when this was a farewell column after 40 years of writing that, and he said so many things which you've forgotten about were launched with so much fanfare. Google Glass, Apple Car, 3D television. I mean, you can go on. I mean, Facebook changed its name to Meta. They think Metaverse will be the next big thing. But then what happened? So I mean, you think sitting here, you can predict which will be the winner. That's the other thing, and whether it will make money. That's OpenAI is losing money with every incremental subscriber, not just on an aggregate basis, but even on the every incremental. And 70% of many of these AI models, for example, are being used by students for their assignments. So that's not a high-paying population, and whereas the investment is just off the charts. So that's just one example. But I'm saying you will not be the best person to catch a trend shift, and especially to use it for investing. I mean, you might, you could have made a call that yes, internet everybody in the world will be using, but you still may not have found the right company to invest in.
True.
I mean, even going outside combustion engine also, there are multiple types of technologies, and within even electric vehicles, so many players. Tesla has been losing market share very dramatically.
I think Chinese and Swiss stuff.
Yeah, and very dramatically. I mean, which nobody is asking Elon Musk about. So,
I mean, but people, don't you think people, like earlier people used to say Tesla is an electric car company. Now they say it's a data company. How much do you believe?
This is all, it is all spin.
I mean, he's a master of spin. I mean, Musk, I have to give that to him. They have built Tesla into this mega brand without conventional advertising. Without conventional advertising, just on the basis of all these outrageous things he says. I mean, all kinds of outrageous things he says, which have
So at the space, you remember.
Yeah, I mean, other than that, also pretty. I remember that Thai cave rescue was going on. So he called the guy who was doing it a child abuser and all that with no evidence, just to insert himself into the headlines,
He does that.
Yeah, so the rescuer, he started questioning his credit. Yeah. So, I mean, if you look at every year, Hyperloop is coming, million robo taxis are coming. So now it is that because the cars are not selling, it is not a car company. This is all complete spin.
Yeah. Yes. Makes sense. Because like he always like he even mentioned something or said something about Taylor Swift, which was unwarranted. Like
Totally. I mean, that was
very wrong.
very wrong.
Considering the kind of people who look up to him.
And but I don't know what I mean. He's never asked that. He's one of my favorite examples. That if it was a woman in his place, would she be asked that how do you run 4 companies and have 13 kids? I mean, nobody has ever asked him that, because it is assumed that man doesn't have to worry his free next job. Yeah. So
Yeah, he even recently has been started making claims about that work is going to be optional.
I wrote a post on that. I don't know whether you've seen it, LinkedIn and Twitter. I've written a post exactly saying that he's sidestepped the real questions of why Tesla is. Tesla volumes have fallen 40% in Asia and Europe, almost 25% in US. So answer that. This, as I said, every year it is that 1 million robo-taxis next year, Hyperloop will take over everything. During COVID times, he made all these claims that children are immune to COVID. He is just into wild statements.
Yeah. And actually that...
We will colonize Mars in 5-10 years or something. And I just want to go himself. So
And I had started that post with a quiz saying that there's this prediction saying that with technological change, human beings won't need to work and work will come down to 15 hours a week. And I said, guess when it was said and by whom? So it was John M. Keynes, who's considered the father of macroeconomics, and he said it nearly 100 years ago. And here we are talking about 70, 80 and 90-hour weeks. Still.
It's still taboo to ask for holidays where people of CEOs of big companies.
So now it is like in 10 years nobody will need to work. It's nonsense.
What will people do? Like, I was like, what will we do? We discussed about how to pick companies and how to analyze the data and everything. But how do you look at as the exit strategy, where across geographies and across countries and across markets, that now is the time to leave? How do you, because that is also important, right? People talk about that leaving some place is more important than when you entered it or whatever. Like, you should know what is the right time to leave something.
So first of all, the question we ask ourselves every quarter, beginning of every quarter, is that today if I had cash, where would I be? So this is a very important discipline, because one of the very ingrained biases in human beings is an endowment bias, which is that you value something more highly simply because you own it. It can be something as simple as a coffee cup, and they've actually done these studies. In a university, let us say in a class, you give half the people a coffee cup and half you don't, and after a week ask them how much is this coffee cup worth, and the people who have it might say it's $7 and the others will say it's $5. So first is that discipline, that because otherwise we get attached that I bought this stock at this price, let it go back to that level, then I will exit if I have to exit. So just forget about what you hold, look at that. But I say the best thing you can do for your portfolio is that when you buy something, tell yourself that I may be making a mistake, because a good percentage will be mistakes. So for example, Warren Buffett, people think buys and holds, but he sells 50% of what he buys within 6 months, 85% within 2 years. So that is, so even if you have a diversified portfolio, we were talking about multi-baggers, the only way to do it is that you have a reasonably diversified and well thought out portfolio of 25-30 stocks. Even then you can be assured that at least 5-7 of them will be total duds, which will not do anything like what you thought they would, and you'll need to exit them. Some will give you normal returns, and if you are lucky and if you've chosen well, maybe 2-3 will be multi-baggered. So therefore you have to be ready for the duds. So always have a stop loss and have it set before. Don't think the market will fall, then I will decide what to decide, because then you will freeze, then you will have 1001 explanations as to why this time it's different, this stock is different, thoda aur dekh lete hain, that is where
then that mind starts playing trick, like you were saying.
So like, I've explained this in one of the chapters here on when to sell, which is that to have a trailing stop loss and there's a whole explanation of what a trailing stop loss
Yeah,
is.
I understand what it is.
Yeah.
But yeah, if you can just elaborate a little
Yeah,
bit.
so basically when you buy something at 50 rupees and let us say you have a 25% stop loss, doesn't mean that if it goes to 37.5 that's the thing set in stone. So if it goes to 100, comes back to 80, you continue to hold, goes to 150, goes to 200, you continue to hold. But from 200, if it comes down to 150, now it's 25% down from the top, if 25% was your stop loss, then you exit. But don't have a target that I'm buying at 50, I'll exit at 100, because then you will not get the multi-baggers. Because if you anyway exit, then where are you going to get the multi-bagger?
Right.
And also sometimes,
that's interesting.
Yeah, and sometimes a stock that you buy, you might buy again, and you might that you sell, you might buy again, and even buy at a higher price. Just forget about what happened. But on the average, this stop loss strategy will save you money. In an individual case, yes, it might be that it was just fall and then it again zoomed. But on the average, it will save you money. And investing is a loser's game. You win if you don't lose. So your first priority is not to take a big hit on your capital.
Right. And this applies across. Do you feel there is anything in particular that in different markets or in different countries, like rules are different?
Not really. The principles are all
remain
the same.
Right.
I mean, the particular factors like in our AI model that work in different countries might be somewhat different. So what contributes significantly might be a little different, but broadly it's the same.
Out of all the industries that you've invested in, and now that you see AI coming up, and you also said that you don't know about AI, like which company will do well. Like Nvidia is so big right now, But I recently, like yesterday or day before yesterday, I was watching this one video on YouTube where they go around on New York, like the Wall Street, and they ask people how they made their first million or how they became millionaires or something. And this one guy said, I invested in Nvidia 10 years ago and now it's 20 million,
Right.
So it's like, but you said that you can't predict it, it can.
And people forget that at one point the largest market cap company in the world was Cisco. It is in the earlier boom.
Yeah.
And now
it's nobody knows.
Nobody knows exactly. I mean, the tech majors, when I started covering the US in the early 2000s, the tech major meant companies like IBM, Dell, Motorola, Cisco. So now the whole list has changed. Those companies are still around, but they are not very relevant anymore.
Yeah.
I mean, the only company which is classified as a major then and is still a major is Microsoft. Everything, the whole list has changed otherwise.
Right. But which sectors or which industries do you think do have that early stage potential? Like this guy, spotted. I mean, he didn't consciously choose it. He
but
said
that's
that
what I'm saying, that you have to buy a portfolio, and
Yeah.
if you are lucky and if you've chosen one or two, but you will not know in the beginning that which of those 25, 30 are going to be the multi-baggers. That is the fallacy that you.
But which industries or which sectors do you see that early stage potential in, according to you?
No,
I mean,
that
not
is
to
not-
predict that they will become multi-baggers.
That is not. I mean, that's not a call I'm even trying to make.
Okay.
So the whole point when I say investing is a loser's game, you have to play it first, not to lose. So we have a diversified strategy. We manage risk very closely, and even let's say there was in India there was a mutual fund performance analysis, and that showed that the best performing funds were the ones which performed during the downturns. There was a fund which outperformed something like 93% of the upturns, but it was almost the bottom performing fund because it fell more when the markets fell. So you're not trying to maximize. That's where many new people get entrapped that you will be the best person in the world to get a multi-bagger. That's going to be unlikely. So don't have very concentrated positions. Do your asset allocation. That's very important.
How can one do that? How
So
can
you have
one
to
diversify according to you?
So first of all, you have to don't try to optimize. Investing is neither as simple nor as complex as people make it out to be. So you don't have to know how to get a multi-bagger. But what you have to do is start saving, start investing, do asset allocation. Asset allocation sounds fancy, but all it means is the buckets in which your money is.
Right.
Like fixed income, which is fixed deposit, bonds, your PF, and fixed income mutual fund, equity, which is direct equity, mutual fund through PMS. Look at it not just for India, look at globally also. So that's important to get those broad things right. How much in gold, if you have real estate. First of all, of course, see where you are currently, and then you look at your ideal. So anything which is in equity should be money you don't have to touch for 8 to 10 years. So put in equity only that. And sometimes people ask me that I'm 25 in a good job, should I put 100% in equity? No, you should not put 100% in equity, because you might lose your job, you might want to study further, there can be a medical emergency, you might be wanting to buy a house. So at least some of your money should be in places where the returns are more predictable, because equity returns are not predictable, not on a 1, 2, 3, 4 year basis. So their returns are very lumpy. Sometimes you will get 7 years return in 2 years and nothing happens for 5 years, or vice versa. So you don't know that.
Yeah. But do you have any favorites, like personally, some of the asset classes that you are more inclined towards in investing?
So you should have a balance.
Of course.
So, and for most people, of course, the largest chunk should be in equity.
Okay.
Unless, as I said, you require a lot of money in the near future. Otherwise, you should, and even like people say that near retirement move entirely into fixed income, which is not sensible advice, because now longevity has increased. You might have a 30-year lifespan after retirement.
Yeah.
So
and the inflation and everything.
Yeah. So therefore, even after retirement, a good chunk should be in equity.
Right.
But not money which you have to withdraw every year for expenses for the next few years. Because if a money is in equity, and let us say you have 100 rupees in equity, and next year the market falls to 80 and you still have to take your 5 out, then your corpus itself comes down. So in equity, when you're living off equity, the timing of the return also matters. So if you get the negative return very early on, your money might get depleted very quickly.
Right.
So you have to do those calculations. I mean, obviously, in this kind of program, I can't tell you all the nuances.
Of course,
but the one part which Indians often miss out on is global diversification. That's the cause for me. I mean, just to give you an idea, when I started working, the dollar was 12 rupees.
And now
in
it's 90.
In the course of less than a career, this is what has happened. And last year, actually, the dollar move is understating the move, because in this 2025, rupee is depreciated against the dollar by only 5.5%. Only, I'm saying, because against the euro, it's almost 20%. Against the pound, Swiss franc, again, in that same range.
Yeah.
So if somebody was planning to go to college or sending their kid to college, and now said Trump, your US is out, your bill went up by 20% in 1 year.
Yeah.
So please diversify globally. Don't put all your eggs in one basket. India is less than 5% of the equity markets in the world. There's no reason 90 or 100% of your money should be here.
Right.
So that's the big thing, where often what is missing in people's portfolios and asset allocation.
Right. Do you see any time, like, how can we strengthen the Indian rupee? Do you see that happening ever?
Not in the foreseeable future. I think
No?
you were still holding down the rupee for a long time, and that is one of the I mean, that's a whole different discussion on interest rates and currencies, but I definitely see the rupee drifting down further.
Oh, okay.
Over a period of time. See, again, rupee, often what happens is sometimes it goes down every year, then it will be in a band for a few years and then suddenly move. I remember making a video at the beginning of 2022 when no one was looking at currency. Rupee had been in this nice little 72 to 74, 75 band for a long time.
Yeah.
I said, this is the year when the rupee goes, and that's when the the move happened, and now it's still going down.
Yeah. Also, you've invested in so many multi-baggers, like you mentioned. What are some of the qualities that you have noticed that have led you to believe that, okay, these are the qualities that long-term outperformers have, like some of the common qualities? What are some of those, if you have observed any?
Nobody has this crystal ball. So let me tell you two very well-known books on this, In Search of Excellence and Good to Great, which was, and those guys did tons of research. I mean, literally they had like research piles this big for each company, and how these companies became that great. Now the corollary to that is that in the 10 years after these books were written, these companies were great underperformers, not just in terms of stock price, but in terms of actual business fundamentals. So actually nobody knows what's going to happen in the future, and there is something called the halo effect. So this is another book, that whenever things are going well for a company, everything about the company looks good. It's the best place to work in, it's the most marketing is good, the CEO is great. ABB, for example, there was a time when it was doing very well, they were acquiring a lot of companies. Oh, the CEO is so decisive, and they, this is great strategy. When it started to falter, the stock price and all that, then it became earlier the CEO was decisive, now it is that he decides everything on his own, he doesn't listen to anybody, and it is so difficult to merge so many companies together. So the same thing can be looked through
from a different lens.
So this is one of the ways your brain entraps you, that you like something, then you will say everything about this is
it's
good.
A confirmation bias, right? Like you want to confirm something that you have an opinion about,
right? So nobody knows that that this is going to be the lasting. As I said, I mean, these are very well known books, and all this research went into this as to what made these companies so great, and then the next period they didn't do well at all.
But even in your own portfolio, you cannot pick any similarities or anything that stands out as, okay, these are one or two qualities that I see. Like, say, for example, if the management has to be a certain way, or if, like you said, cash flow earlier. So do you observe any pattern, basically?
So in fact, recently I was part of the jury for this Best CEO Award. So one of the things which I agree with Warren Buffett on is that he says that when a great management takes up a not so good business, it's normally the reputation of the business that survives. So it's very difficult for managements to make a real difference. The business is a dog business. So sometimes they give too much credit also to CEOs. I mean, at times, of course, you can transform a business, but most of the time you wedded to the realities of that business. Like Pepsi, over a period of time, especially during Indira Nooyi's time, it transformed from a sugared soda company to being a much more diversified company, because over time this soda is going to go down. But or ITC in cigarettes, of course they had a long runway, they had a lot of time to make that change, but they have also been changing over time. You should not give too much of importance to the management, and this is the problem when people ask me also, and including some very sophisticated investors, that which are your high conviction ideas. So high conviction is what? It is getting wedded to a narrative, to a story, and which is a very, very seductive thing for human beings. We are creatures of the story. We love stories. We don't like data. We don't want to think in probabilities. We don't want to think in data. We love the stories, which is why all ads are stories. Because that's what gets you to react. But I actually wrote a 3-page note to that investor saying, this is actually a big bang, saying that why we do not consciously have high conviction ideas. This is something we guard against. Because the high conviction means you are married to that idea, you will not change your mind in a hurry. So we are always that, forget about what we hold, look at it again, which is the best place to be in today.
Makes sense. We talked about diversification and how important it is for the investor, from the investor perspective. Now, let's talk about it from the company perspective. Like, what do Indian companies misunderstand about global competition, right? When you said that you don't see rupee getting stronger anytime soon. So what are Indian companies doing wrong or misunderstanding about the competition, and how do you see the peers, where do you see the execution strengths as well as gaps between Indian companies as well as global companies?
Okay, first of all, of course, let me just, on the investor front, just add one more thing, that US is not the world. So this is another fallacy, that people think that, I buy one US index and I am globally diversified. No, you are not. US has done very well for the last 10-12 years and has outperformed the world, and for most investors that's the only time horizon they have seen. But there have been periods when US has underperformed and other markets have underperformed very substantially. I mean, 2003 to 2007 is one great period when emerging market index went up 3.5-4 times. India itself went up 6 times, and US was a dog market at that time. So that's one. Coming to Indian companies, I think we have done a very poor job of globalizing as a country. So we have no significant consumer brand coming out of India, let alone R&D innovation. So we are not even trying. I mean,
true.
IT services, it has been my bugbear forever for the last 20 plus years, that these are companies with so much cash on their balance sheet and access to trained humans, and then they have not done anything with it to move up the value chain. They have pivoted within their IT services many times and very well, and that I still bet that even the AI thing they will be able to do, but they are, where have they done anything on actually any research? And as I said, even the consumer brands, you've not tried to go global. Even all the Korean and all that companies went global back when, and so that's like we don't think global. We've acquired a few global brands here and there, but
we're very
inward focused.
We're lazy.
We are very inward focused. We think our market is big enough for us.
True, that happens. And what do you see as the strengths or gaps in global companies? Not just, as you said, US is not the only market, but Japan or like any other country.
That will vary from company to company. I mean, all those, the thing is, most of the large companies in the world are global companies. I mean, they have set out to be global companies, both in terms of their supply chain as well as where they sell. So that they have done. I mean, there are many global companies that have come from many countries, not just the US or the Western Europe. So,
and would you say innovation is one aspect of it?
Yes,
where
innovation and branding, these two things. I mean, look at Apple, it's a branding exercise. Coca-Cola is a branding exercise. So those are the two things where the intellectual capital is there, which is what in a sense what Trump talks about, the hollowing out of the US manufacturing, is because the companies decided that the value addition was in innovation or R&D and in the marketing and branding. The rest of it can be just shipped out anywhere. So
true.
So that's a very different mindset.
How do you how does First Global look at its peers in competition, and how do you stand out as an investment firm, and what would you tell, of course we know how are you different and everything in terms of you're the first company to go global and you put a lot of emphasis on diversification, but again, what are some of the points where First Global differentiates or standouts or looks better in terms of investment firms for the audience, for the viewers, to pick for and to choose?
See, first of all, as far as global part is concerned, actually nobody really in India has any expertise. Now, what worries me, I mean, generally mis-selling in financial services worries me. And as I said, I waited 20 years to even launch a PMS because I think the whole it's such a big responsibility to take someone's hard-earned money, and I cannot do it unless I have something which is consistent and predictable, which is where the system comes in. And I see sometimes people, and this has happened to me for 30 years, that whatever I talk about, people just pick up, but they pick up only the headline, not the hard work. So like, for example, we've been using this human plus machine system because our system is not a black box system. It's not as if that it's some algo based trading or something. So I saw two schemes being launched saying man plus machine, man with machine. I said, you can't think of a 3-word new slogan. You're going to do that hard work of a million lines of code and all the other checks and balances in that. So that's the problem. Global, I see the same thing, that fund managers who till last year had zero and this is on record in their interviews, they had zero exposure in their personal portfolios also to global, suddenly now are on podcasts and interviews saying we are experts in global investing. So this is the sad part. Or for that matter, I only half jokingly say that if you want to know where the froth in the market is, see where the thematic funds are being launched, because we mapped it over 25-30 years, the cluster of thematic funds.
What are thematic funds exactly for somebody who doesn't?
So it is like particular, it's not multi-cap, flexi-cap type. It is when you're talking of a particular industry.
Like would a consumer fund
like defense, PSU, IT. So if you look back, the IT funds came just before the 2000 tech crash. Now you've seen all these defense PSU small cap. So these are all niche funds. So never go into that, because they almost always, when they are being launched, because they are always come at the peak of the cycle. So better as a general investor to go into multi-cap, flexi-cap, that sort of thing, rather than, or even a multi-asset.
Or rather than a particular industry focused.
Because, and why do most AMCs launch it? Not that they don't know that this theme has run too long, because it's easy to raise money, because by that time the general viewer or investor also knows about that theme. They think, oh, my friend made money in PSU, I haven't, now this PSU fund I will invest. So, so when we talk of, so that's why our both in India and globally, we don't have a proliferation of products. We don't have a number of products, because we say that you must be diversified. So we have, like in India, we have an equity product, and then for people who want lower volatility, we have an equity plus plus. So some fixed income, some precious metals have a proliferation, because we think you should be diversified. So all geographies, all assets, we have it in a fund structure and also in a portfolio structure. And as I was saying, that it's a cause for me that Indians should do it. So it starts at $10,000, which now has become 9 lakh rupees. It was 7.5, 8 not so long back. So that's another indication. And normally that sort of product you will not get in a private bank for less than $1 million, which invests everywhere. I mean, it buys South African REITs, and it can buy Singapore trading company, or a Australian mining company, or a Chinese shoemaker. So
that's interesting. Yeah, that's interesting. What advice would you like to give to 20-30-year-olds who are starting their careers about finance, how to make intelligent financial decisions, and especially for young women, what would you tell them about finances, like how to handle their finances, and how important it is to have a control of their own finances?
So women, especially young and old, I would like to say that take charge of your own finances, because too many women leave it to the men in the house, thinking that they know more, which may or may not be true in the first place. So take charge of your own finances, and this holds for, of course, men also. That start saving early. You will, if you do all these, there are now all kinds of calculators on the net, you can look at it, that if you start saving at 25 versus 30 versus 35, how much more you have to save. So start early, and don't be at either end of the risk spectrum. Don't be in 100% fixed deposit, and don't try to become a day trader or a crypto trader either. So do the broad asset allocation right, and that's 85-90% of the way through. So don't try to get too exotic, don't try to chase the multi-baggers. And but suppose you say that, oh, I mean, my salary is not that much, I can't save 25% of my salary. Start with 5%, save something, but then also next year increment you put 70% in this kitty. That's the thing. Otherwise, lifestyle inflation will take away everything. So
then it will not grow to the level that you are hoping for it to, even if you do it long term, if you do it with less.
Yeah, so you have to, so every time your increment comes, one big bulk should go there. So that's, have that discipline, so that you have a good nest egg to fall back upon.
Yeah. You would say that consistency, to just build that muscle, and consistency is very important.
Yes, so do it regularly, and do it, as I said, start early, don't be at either end of the risk spectrum, manage risk, and just do the broad things right. You don't have to spend a lot of time on it. I often say the good investing is boring. Many times people tell me that you repeat yourself in your interviews. I said the investing advice doesn't change every 2 weeks. It is what it is.
It's not the weather, right? Anyway, now we've almost reached the end of our conversation, but before that we do a segment of Curious Quick 5 questions, where I ask the guests things that they're curious about lately. So are you ready? It's going to be a little quick.
Sure.
What's the one thing that you're curious about lately, apart from finance, investing, funds, everything?
Probably learn a little more about AI and geopolitics.
Okay, interesting. What's the one person that you're curious about, living or dead?
Person, I rarely think about in person terms. But maybe,
like, if you had to have a dinner conversation with someone, like, who comes to your mind?
The people actually who were living, I would say Salman Akhtar, which is one who's a psychoanalyst in a shire. So not Daniel Kahneman has passed away, but definitely he is my pin-up boy. So he's another one.
Okay, interesting. What's the one place you're curious to travel to?
Oh, lots. Egypt probably.
Yeah, with the new museum opening there.
Yeah.
Should be interesting.
Yeah.
What's the one book or author you're curious about? I mean, of course, you mentioned him a lot of times, but
Yeah,
any
but,
new ones that
Oh, I
recently?
read a lot, and I read a very wide variety of things. So this year for me, the big discovery of the year has been Manav Kaul. His book, I mean, I was just floored. I've fallen in love with his writing.
What it's about?
It's a book called Rue. That's the first one I read. Then I've read one or two more. So I read it in Hindi.
It's a
which is-
fiction book.
It is actually broadly a travelogue of his
Okay.
travel into Kashmir, but it is more internal than external.
Got
is-
it.
is-
Got it.
so,
Self-exploration kind of.
because he was born in Kashmir and
Got
then,
it.
and so but beautifully written. So
Hmm.
I read both in Hindi and English. I read all kinds of books. So,
Yeah.
so this was I read.
We've
the
gotten a good list of books to read from your
I
recommendations.
do a book roundup every year of the best books I've read. So
Right.
it should be coming out this weekend.
Great.
So,
We'll be looking forward to
always
it.
difficult to bring it down to 10, 12 books. That's every year. That's the challenge.
That's the struggle. Yeah. What's the one technology that you're curious about? I know people say AI, and you also said you want to learn more about AI, but what is the specific application that you're interested in or curious about?
See, we already use it in our business, but I really want to go beyond that and see how it will impact humanity in general.
Yeah. This is my 4th season, and we've started this new segment where every time I've interviewed a guest, they also have been curious and they've asked me a lot of questions off camera. So I've introduced this segment. It's called Curiosity Reversed, where the guest gets to ask me one question.
So where do you see yourself 5 years from now?
I see myself heavily invested, financially independent. That's the first thing. And well traveled, travel more, learn skiing maybe. Yeah, and what else? Yeah, I mean, just enjoying life, traveling, and being independent basically, no matter where I am, who I am with, but having my own voice, doing my own thing, and not being attached to people, but being attached to goals or the causes that I would like to make a difference in, maybe. Yeah, that's it.
Okay.
Thank you. It
Thank
was a very
you.
interesting question. It was lovely having you. And any last thoughts that you would like to share about our conversation?
So, I mean, we spoke about women, so I just want to say that, and you spoke that you want to be independent and be in charge of your life. So, I hope more young women do that and don't clip their own wings or truncate their dreams.
Yeah. Very well said. And it was lovely having you again. Thank you so much for your time. It's been a long time now. We were all hungry here. And I can't wait to treat you to some good food. And yeah, look forward to doing this with you again sometime soon.
Thank you for having me.
Thank you so much.